Hello viewers, we'll be going over WTI crude oil. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for WTI crude oil. So back to the technical analysis. Today we're flat on oil. As for the 1 hour chart, we are starting to approach to positive MACD, and we start to see a slight divergence. As for the 4 hour chart, we are approaching to negative MACD, and there is a divergence in play, and we have not reached any overbought RSI yet. If we expand that further onto the daily chart, we also start to see a slight convergence for a daily MACD. It's quite difficult to see at the moment, but at the moment we are seeing higher highs and higher lows as well. So if we do manage to climb higher, the next resistance that I see will be the 200-day moving average, this green line, which is around the price of $44.36. As for support, if we do manage to fall lower, the next possible support will be around the price of, say, $35.98. Reason why, we had previous support levels. They dated back to June 12th, and the 50-day moving average, this yellow line, may approach that in time and act as an additional support as well. So if we do manage to climb higher, that price movement to the upside is roughly around 9.8%, and to the downside to hit support, that price movement is roughly around 11%. So now let's head back to the day-by-day probability model. These models are now available in the link below, so do check it out. So as we progress to the 7th day, we have a 78% chance for WTI crude oil to climb between 0 to 7%, and to the downside we have 11% chance for it to fall between 0 to negative 7%. And on the extreme case, we have 11% chance for WTI crude oil to fall between negative 14% to negative 23%. So now let's head to the day-by-day forecast for WTI crude oil. So we have 1 day out, that will be a Thursday, and 2 days out will be a Friday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The current trends are a blue line, and overlapping it happens to be the best match. So right here we have our current trend, and below is a trend that we found on the line graph above, and this trend dates back to August 14 to September 26, 2018. So let's begin comparing both trends. So on the current trend, we start off at the middle Bollinger Band, proceeded to dip lower to touch the bottom band, and then towards the last half we have it average above the middle Bollinger Band. Now in the trend in question, we have it start at the middle Bollinger Band, proceed to touch the bottom band, and then the last half we see it average above the middle Bollinger Band. So what we have here is 1, 2, 3 points. We also have 1, 2, 3 points on the current trend. So there's a reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined was August 14 to September 26, 2018. Back then, WTI crude oil climbed around 4.4%. If we head back to the day-by-day probability model, that coincides with this standard deviation to the upside of 78% chance of it climbing between 0 to 7%. Let's examine closer on the technical performance of each trend. So on the current trend that we're in, we're down 60 basis points from monthly high, up 14% from monthly low, up 2% from 10 simple moving average, and up 3% from 20-day simple moving average. We don't have a 50-day simple moving average because we're only examining a 30-day trend. So now let's examine the trend that we just found. Back then it was down 83 basis points from monthly high, up 11% from monthly low, up 2% from 10 simple moving average, and up 3% from 20-day simple moving average. So among the two trends, there are technical similarities. And again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.